Hi, it's Kerry Artak with Wicket Stocks, bringing you your daily Tesla report for Thursday, August 1st, 2024. But before we check out the charts, I just want to ask you to please click like, share, subscribe, and check out wicketstocks.com, where we offer a full suite of both daily and weekly analytical videos, just like the daily Tesla and daily NVIDIA reports, daily analysis in the SPY, daily analysis in the Triple Q, weekly analysis in the S&P 500 index, the Nasdaq 100 index, and Apple stock, as well as 2 individual stock picks a week that you never see on YouTube that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor, always looking for 20% moves or more on those underlying stocks. And you get to see all of this for free. We offer a 5-day free trial up front. So check out wicketstocks.com. Where to begin? I am going to start. Well, let me start with this chart here. I think this is worth showing. The Triple Q, the Nasdaq 100 looks exactly the same. This is a weekly chart that goes back over 5 years. I've been mentioning how the Triple Q and the Nasdaq 100 both have been testing 4.5-year channel resistance, the price ceiling. We topped out here about a month and a half ago, and that does coincide exactly with the high, roughly with the high, I should say, in Tesla about a month ago. And I'll also say that we reached our first target. And it may be the only target. There are another couple of long-term price points below the market that become an objective if we close below this channel bottom. This is a weekly channel bottom in the Triple Q. If we close below it, then we get into another phase of 2 to 3 week aggressive selling. But until then, we can now round up in the Triple Q back to this long-term channel top over the next 2 to 3, 3 to 5 weeks. So, yes, we give the exact numbers, obviously, in our daily Triple Q report through wicketstocks.com. But I just wanted to make the point that as we're putting out the low in the Triple Q, we also had a low process in Tesla. This is a daily chart over the last week of activity. We have a channel bottom at 217.90. I still want to call it session containment only. Because I still can't ignore, a sell signal that played out about a week and a half ago when we settled below this 251.03 rising 1/3 speed line. That does indicate, as far as speed line analysis is concerned, the rising 2/3 speed line that is presently at 194.99. So that is the odds-on favor, but by a degree. I mean, if we were to close today above this 239.67 combination descending speed line channel top, then I'm no longer anticipating any test of 217.90, or for that matter, as we continue south, I would not expect this lower area. So I know there's a bit of a contradiction here, because if we were to close, of course, above that descending channel top at 239.67, I would then consider that rising speed line that we find at 251.03 to just be kind of a mild hesitation point on the way up. But this big picture sell signal is still intact. And as long as we are above 239.67, I'm going to go with that. We could top out at 239.67 through next week, and from here fall away within 1 to 2 weeks back down into this long-term support region that we find in the 194.99 to 271 region. So let me rephrase that to clarify that if we test the 239.67 area today, and we may, this is a solid zone to take profits if you've been long the last 3 to 5 days, and it's also a great area to go short on a 3 to 5 day time frame back to 217.90, and on a 2 to 3 week time frame or sooner down into that 194.99 to 200.71 region. This lower area is long-term support after all. It is that 1-year channel top in the daily chart that we find in the weekly chart at 201.79. So if you are given the chance to buy this area, 201.79, over the next few weeks, it is an area you can buy into longer term. Still anticipating eventual upward continuation to 328.66. And so that is that. So let me get back to kind of this chart here. We've got 217.90. If tested, can contain session weakness. I also, to the downside today, I've got 225.99. Now, I don't have it shown here, but it is nothing more than the high of the low that was put out about a week and a half ago. So the move low, the high that day, 225.99. it can contain intraday weakness, and above which this market should test today 239.67. Combination descending two-thirds speed line and channel top, able to contain buying through next week. Once tested, once again, 217.90 and reach within 3 to 5 days. 3 to 5 day swing traders. And if you sell 239.67, you can then anticipate within the next week or two this 194.99 or 200.71 region where profits can be taken, a long entry made as we move into the fourth quarter and really into later year. This is a long-term support area that once again can contain selling possibly through the rest of the year, and above which 328.66 in reach by the end of the year still. And so on that count, let me go back to this chart here. And that is to say that if we were to close today above 239.67, this is your next buy signal on strength. And by buy signal, I'm talking like 3 to 5 weeks and beyond, because I would say within a week or two, we should retest that 271 even July high. And within 3 to 5 weeks, and that could take longer because this 294.19 formation is rising, you can see actually that over the next 3 to 5 weeks, it's already in the 320s, which should remind you of this level at 328.66. So this is really just another way of saying that if we were to close today above 239.67, I'm going to say by the end of September or sooner, we should reach that objective that remains in reach by the end of the year at 328.66. So let me re-clarify. Let me say that one more time. Closing above 239.67. No good reason to be short Tesla as we move into next week or as we move into later August. You want to be long Tesla as we move into next week, the next couple of weeks. 271 even becomes a 1 to 2 week target. 294.19 rising at a pretty good pace, expected within 3 to 5 weeks. And by that time, over the next 5 weeks, it's already in the 320s, which is our long-term objective anyway. So if we close above 239.67, you may consider reaching for a 320, 330 strike out of the money calls that don't expire, because I consider that to be kind of a 1 to 2 month move. You might want to go like an expiration that is about 4 months out. If we were to close above the 239.67 formation, you could reach for 320, 330 strike out of the money calls that don't expire until October, November of this year. Until then, this is your short sale area for both day traders, 3 to 5 day swing traders back to 217.90, and 2 to 3 week swing traders down into this 194.99 to 200.71 region, which you can still say is a bit of an objective following the violation of this speed line, that we settle below 251.03. But, I want you to ignore 251.03 if we close above 239.67, because then I'm expecting meaningful gains as we move through August and into September. Is there anything else to say? I think I've said it all. I don't think we've got anything else to say for Thursday's Daily Tesla Report. I'll be back tomorrow with Fridays. Please click like, share, subscribe. Check out wicketstocks.com. We've already put out 2 stock picks this week. You want to check them out. One's more of a small cap. The other one is a large cap. And I'm not going to go into it right now, but you want to see it. You get it 5 days free, so you can see them both and recent stock picks if you sign up for wicketstocks.com. If you don't like what you see, you can always bail on your 5th day at no cost to you whatsoever. That's all I've got. Please, I'll be back tomorrow with Friday's Tesla Report, and you have a great evening.